Okay, I'm going to go ahead and just record a video that goes along with the very last slide of chapter 3, which is angry. It's called the Angry Birds problem. And this particular problem really does everything that we learned in chapter 3. So it addresses both job costing, which is an efficient way to track your product costs when you are operating in a very specific type of manufacturing environment. So that was the small batch, unique customization. So it addresses that, and it also addresses the handling of manufacturing overhead from what we call a normal costing system perspective. So again, the solution is already on ELC under in-class solutions, but I thought it might be helpful just to go ahead and have a video that walks you through all the calculations. So let's get started on it. So at the very beginning, you'll see we're given some information about the jobs that were in progress. Now, at this point, since I see the word jobs, I'm going to go ahead and begin some job cost records below. So the two jobs that were in process are level, if I could spell, level 1 and then level 2. And I'm going to go ahead and really start just creating this template so I don't have to think about it as I go with numbers in just a second. We're going to start with beginning balance. And so those are the two levels that are going to have a beginning balance because they were left over from, not left over, but they weren't finished in a previous period, but they were started. So that means that they do have product costs that attach to them and carry forward. Now, during the current period, we're going to add DM, we're going to add DL, we're going to add MOH, and then that's going to give us an ending balance. So go ahead and kind of getting stuff set up here. I'm just going to go ahead and start filling in information. So it says level 1 had a beginning balance of $10,400. And then level 2 had a beginning balance of $8,600. And then we're told that during the month, there were 2 additional levels started. So level 3 and then level 4. So we have 4 different levels that we're looking at here for these job cost records. 2 of those are in process, and then 2 of those were started in the current period, so with no beginning balance. It said during August, level 3 and, I've already read that, sorry. Levels 1, 2, and 3 were completed and sold at cost plus 40% during August. Now, we're going to deal with the cost plus in just a second. But the one thing that I always like to do in these problems where there are multiple jobs that I'm working on is above the column, so kind of above the job cost record for that particular job, I like to write what I call the status of the job. So that can either be WIP if I'm still working on it, finished goods if I finished it but not sold it, and then cost of goods sold if it's been finished and sold by the end of the period. So here we're told levels 1, 2, and 3 were sold. So that means that their cost for all of those have made it all the way to cost of goods sold. And then we're told that level 4 remained in process at month end. So that means its ending balance is going to appear in work in process. And then for next month, so September 1st, that ending balance for level 4 would then become the beginning balance for level 4. But we're focused here on August. So let's go ahead and try to attack this cost plus. So basically what this is saying, if you look over to the side, is that whatever I'm going to sell the job at, so the sales price of the job, is equal to the cost of the job plus the cost times 40%. So that 40% is sometimes referred to as a markup percentage. Whoops, didn't mean to do that. So if you come back and look at the formula algebraically, what you can see is that we can factor out cost. So cost, and then inside the parentheses, we're going to be left with 1 plus the percentage, which in this case will be 1.4. So another way to think about this, just kind of writing off to the side, is that the sales price is equal to 1.4 times the cost. If I could do this right, times the cost. So I'm going to go back over here because I left out the period, and there we go. So it's kind of 2 different ways you can look at it. It's really the same thing, but what this particular calculation is really highlighting is that if you screw that cost up, it's obviously going to mess up the price. And if we're choosing to use a normal costing system, which we are in this problem, then we want that to be as spot on as possible. Otherwise, that will mess up the price and affect our profitability and our competitiveness in the market. So let's keep reading at the second paragraph. It says the company allocates manufacturing overhead at a rate of $11 per DL hour. So that's telling me that my POHR is equal to $11 per DL hour. Now notice here that you've not been asked to actually calculate the POHR. So I could have given you budgeted manufacturing overhead, total budgeted direct labor hours, and you would have had to calculate the POHR, but here it is given to you. And then we're told that direct labor wages average 10 bucks an hour. So our DL, what I would call wage rate, is equal to $10 per DL hour. And one thing to note about that, I'm going to go ahead and get rid of that and just put it to the side over here. So our wage rate is equal to, again, that $10 per DL hour. So one thing I want you to note about these two rates is that they have the same, what we call cost driver. So what's important about that is in a moment when we go to do our calculations, we're going to be able to use that fact, the fact that they're both driven by DL hours, to help link in and complete our calculations. But we'll get to that in just a moment. Let's keep reading. It says the sales staff is paid a 2% commission on all sales. Now, I'm going to be straight up. That's a trick, because that is an example of a marketing expense, which, remember, is on a link in the value chain. That is not a product cost. And if you look down at the questions very quickly, you'll see that the questions only ask you to go through gross profit on the income statement, which means that anything that's a period cost is irrelevant, and therefore that 2% is irrelevant. So it's not included at all in the calculations. And then we're given some information for August. So we're given DM and DL. And I'm just going to go through, actually, I think I'm going to do this. I'm just going to go up and grab the amount. So 12, whoops, I did the wrong one. Yeah, so 1,200, and then we're going to go up and grab 1,800, and then I'm just going to copy that across and let it grab those other four levels. So you'll see, again, DM all the way across, DL all the way across, done and done. That's easy. Now, the next thing that we have to do here is get this allocated MOH. And I know it's allocated and not actual because I have a POHR. Now, to get that, there's a couple of things I want to review with you. So the first thing I want to review is how we get allocated MOH. So allocated MOH is, in this case, the DL hours used by the job times the POHR, which is going to be $11 per DL hour. So if you take a look at this, and sorry about the formatting, but I'll just leave it there. If you take a look at this formula, what you notice is for these jobs, you're missing DL hours. So it's not given to you anywhere. So where else could you possibly find the DL hours? Well, that would be over here using the wage rate. So remember that your DL cost is equal to your DL hours times your wage rate, which in this case is $10 per DL hour. Now watch what we have. If you go down and look at line 15, we have DL for each job, okay? So I'm going to look at level 1. I'm going to take it slow with levels 1 and 2, and then I'll pick up the pace with levels 3 and 4. So here's what I'm going to do. I'm going to take level 1's DL cost, and I'm going to divide that by the wage rate of 10. Now stop for just a second. DL cost, look up here, divided by 10 is going to leave you with your DL hours. Now, those DL hours are going to link us directly into allocated MOH. So from there, what I'm going to do is multiply those hours by the 11, which is the POHR, and that's going to result in the allocated MOH. So then I'm going to multiply that by 11, and I have allocated MOH of 1980 for level 1. Again, let me take it slow here. I'm going to do the same thing for level 2. So we're going to take the DL cost of 4,000, divided by the wage rate. Oops, I don't know what it's doing. So the DL cost of 4,000 divided by the wage rate of 10. That gives us DL hours worked for level 2. And then we're going to multiply that by the POHR of 11. And so we're going to do that all the way across for levels 1, 2, 3, and 4. And then watch this. I'm going to sum all of those allocated MOHs up. Total allocated MOH during the period. I don't know what it just did. Maybe I did a circular there. Let's just do it individually. Hopefully this will work. Struggles. Let me try it one more time. Sorry about this. Yes, there we go. So it gives me total allocated MOH of $7,480. All right, and we'll use that in just a second. But the other thing that I want to do here is go ahead and get these ending balances for all of the jobs. So we're just going to go across and just copy that over, draw us a line so that we can see easily. And there are our ending balances. Now note this. These three jobs, these costs have made their way to cost of goods sold. That's what this tells us, remember, above the columns. This 4680 is still sitting in WIP, okay? We do not have any finished goods. Everything we finished has been sold during the period. So now we're ready really to go back and do the problem. First thing we're asked is to calculate gross profit, assuming the company uses normal costing and incurred $8,000 in actual MOH. So remember, this is total allocated, MOH. And then we're told in the problem that our total actual MOH is 8,000. Now, this confuses students a lot because what I see students wanting to do is leave this 880 out of this total simply because it's the one job that's not sold. But here's what you need to understand. This 8,000, part of this was incurred because of level 4. And remember, there's only one MOH account, and everything goes into that account, not just the MOH related to the jobs that were sold. So when we go to close out MOH, we've got to look total to total. It's not, again, just the jobs we sold. It's all of the jobs we worked on, and all of those jobs were responsible for the generation of that MOH. So in this case, since our total allocated is less, that means that we have under allocated, and we'll talk about what that means. And to make it right, we're going to have to increase in our income statement cost of goods sold. And again, you don't really need to know this part, but this 520 would actually be in an adjusting journal entry in the financial accounting records. But for us, all we really need to know is if it's under allocated, we got to add it back to cost of goods sold, or unadjusted cost of goods sold to get the adjusted cost of goods sold that goes on the income statement. And so we'll use that in just a moment. What I want to do now is just go down and answer the first question. So we're going to take sales revenue minus adjusted cost of goods sold, and that's going to give us gross profit. Now, here's how we're going to get the sales revenue. I'm actually going to come up here and just do kind of a little separate calculation. And I'm going to calculate the sales price for each of the jobs we sold using this shorter version, this factored version of the formula from up top. So that's 21,532, 35,000, and then 3528. And we're going to get rid of a couple of those decimal points. And that's going to end up giving us sales revenue of, drum roll, $60,060. Now, this also confuses students because you're like, okay, wait a minute. We're basing the sales price on a number that includes an allocated MOH. You see that? So we didn't go back and adjust these jobs, even though we knew we had under allocated. And here's why. In a problem like this, you're seeing the end result. You have the full picture. But remember, the reason we're using normal costing is so that we can bill when we want to. So let's just assume that level 1 was finished on, let's say, August the 3rd. Maybe I wanted to bill it on August the 3rd and not wait till August 31st. So if that was the case, I wouldn't have known the underallocated amount. I wouldn't have been able to prorate it back to all of these jobs. So again, it gets back to the fact, if I mess up my budgeted MOH and that affects my POHR and it's a drastic mess up, then that is obviously going to affect what you end up charging for your products. Now, in this case, what essentially is happening is the customer's winning, so to speak. They're benefiting from this because the costs are lower than they should be. But hopefully it's not enough to really, in the grand scheme of things, affect the profitability of the company. Now, if the reverse was true, if we had over-allocated, then in that case, the customer would be losing because their price would be higher than it really should be. And either way, you just have to think that the customer is going to figure it out. If the price is too high. If the price is too low, then obviously the company is going to figure that out. So we do base it on unadjusted amounts, but that is that sacrifice of accuracy for timeliness. We just have to make sure as a company that it's not drastically different. So back to this, $60,060. Our adjusted cost of goods sold is going to be the sum of the 3 jobs that were sold. Okay. So the 15, the 25, and the 2,500. But then to that, remember we've got under allocated MOH. So we're going to increase that cost of goods sold by 520. Okay, now I'm going to show you something real quick. So our adjusted cost of goods sold is 43,420. But in this formula, remember, it's actually subtracted. So we have adjusted cost of goods sold of 43,420. And that gives us a gross profit of 16,640. And that's the answer to this first question. So this answer is $16,640. The second formula says calculate the ending WIP. That ending WIP relates specifically to level 4. So the ending WIP here is just going to be 4,680. And then finally, we're asked to calculate the ending finished goods. There are no just finished goods, so the answer to that is going to be 0. So hopefully this was helpful if you weren't able to kind of follow what happened just by looking at the solution. And as always, if you have questions, come see us in the accounting lab or during my office hours.